Well, hello and welcome to today's Trade Tracker. Today is August 17th, 2025. It is 1:17 p.m. Sunday afternoon. We're getting ready for the trading week, and we're all caught up now as far as the Apex multiple time frame breakout strategy. We're up to current date. So what I'm going to do is I'm just going to review kind of the end of the trade on Friday, where it ended up, and then moving forward this week, it's going to be live trading, and we'll show you how the system has been performing here, moving forward day by day, and then we're going to at times get into the scalping strategy, which is has about 10 or so trades a day for the scalpers. This one is the breakout strategy has usually one or two trades a day. Keep in mind the way this one is structured. There is one trade but four positions per each trade. So it trades basically three trades a week, but each of those trades has four positions. So it's really like four mini trades. I mean, sorry, 12, 12 positions or 12, if you want to call them trades, per week. 12 different positions, but they accumulate to three major trading positions. And four positions within each trade. Okay, let's get right into it. This is remember now all the trades begin with the breakout signal. So this one was on August 8th, was the breakout signal at 8:50 a.m. Central Standard Time. All right. Keep in mind we always enter for contracts, and this is using the micro minis. Keep in mind you can enter any denomination you want. If you want to do 8 or 12 contracts, if you're a little more aggressive, obviously you can do that, and then you would just multiply the results times two or times three, depending on if you did 4, 8, or 12. But let's start, for example purposes, continue as we've been going with the four micro mini NASDAQ contracts. There's the automated breakout signal. So we put our stop loss for all four contracts 100 points below. So we entered at 608. The stop loss is 508. And then we move forward with our contract, with our targets, right? We have 120 points for target one, 160 points, target two, 270 points, target three. And keep in mind, you don't need to babysit the strategy. You can put your stop loss in, put your targets in, and you can just go about your day, whatever you do. You don't need to babysit this, which is really nice. So let's see what happens here as we move forward. Target one gets hit. We make 120 points. Target two gets hit. What happens when we hit target two? We move the stop loss up to break even for the remaining two contracts. Moves along here, right? We get tagged out. We get stopped out for two contracts. Now remember what happens here? I don't know if you recall. I think it was the last trade or two. What happens is once we get a green, these three strategies right now, I mean, these three conditions, right? Once we get a green fusion candle, which we got there, closes above the stop loss, which we got here, and direction of the breakout signal, which is here. Then we go long again with those two contracts. So we close them out here, go long again here, keep our stop loss the same. So we move up here, right? We follow the trade along, keeps going. It does not get stopped out here. The low there was 622. Our stop loss is 608. So of course we did not get stopped out there. And so one of those two get hit here to 270 point profit. Now we have our runner. Our runner continues along here. And then let me move this out of the way here. So now obviously what happens, we have our stop loss is down here at 728 for the runner. But look what happens, right? Why did we close that fourth one a little bit higher at 23,780 and not wait for the 728? See that dotted line? We closed it here. Why is that? Well, it's because look at what we got. We got a breakout signal to the other direction. When we do that, we close out all trades. So the fourth runner gets closed out here at 23,780. And now we're heading the other direction with four contracts. So in summary, target one gets hit at 120 points. Target two, remember, got hit at 160 points profit. We got to stop out. That was a break even. Remember the stop out here that we showed you over here, right? That stop out was, where was that? That was right over, yeah, right over here was the stop loss at 608, right? Because that was the entry 608. So we got out exactly at the entry with those two contracts. And that's why the stop out was zero. Target three, we hit that 270 point, which we just showed. And our runner was 98 and three quarters points. That's the exit right here, right? We got in, right? Of course, we got in all four contracts over here at 608. The runner gets out at 780, and that's the difference there of 98.75. So those are the profits on trade, on that particular trade, with of course those four positions. Okay, now look at let's see what happens over here. We continue on. Now we're short four contracts. Put our stop loss 23,880, right, which is I'm sorry, it's 100 points, right, above our 780, because that's our entry going short is 780. 100 points above that is 880 for the stop loss, okay? And look what happens, right? We go down, we put our target one, our target two, and target three, and our stop loss. And look what happens here. Price moves against us, and where does it go? It goes to 881. Our stop loss is 880. So, of course, all four contracts got stopped out here. So all four contracts got stopped out. Now look what happens here. Just like the last trade we talked about, this is the exact reverse of what we were talking about over here. Okay, so now what happens according to the trading plan? Now these three conditions over here. Number one, the red fusion candle. Yes. Why is it red? Because we're going short. Closes below the stop loss. Yes, which it did right here. And three, direction of the breakout signal. We're going short and it's red going short. So we re-enter here all four contracts. So now we're live once again. This trade is open, four contracts going short, and this is where we're at. So we re-entered right there, that white line, the close of that candle. So now we are short four contracts at 23,794.5. And that's where price is right now. Prices, of course, is closed here over the weekend. It's going to reopen here in a few hours. And there's our target one, target two, target three. Of course, we keep those as the original entry. And then our stop loss is the same. And we'll see what happens. We'll play it out and, we'll move forward. So this is really getting exciting. Just as a quick summary to kind of show you where we're at up until this point in time, right? This is the equity curve. And these are all 32 positions that we had closed. So we're doing pretty good there. And let me go back here, one more here. And these are the 8 trades that we had and the 32 positions, right? Every trade is 4. So we've had 8 trades, 8 times 4, of course, is 32. So here is the breakdown, every 4 trades, what the equity curve looked like, right? The first, when we started doing this, a couple weeks ago, there's the equity curve at the end of the 4 positions or the trade number 1. Right here's the end of the 8 positions, end of the 12 positions, 16 positions. So we're doing pretty well. This flat line actually here is actually up now because the last 2 trades were winners. So that will be updated here in a few days, and then I'll close on this slide here. This shows. I'll move this out of the way here, and this shows how much money was made since we started doing this. We have our target 1, target 2, target 3, and our runner. Target 1, target 2, target 3, and the runner. All positive so far. Look at target 1, target 2, target 3, the runner, 1,100. Target 1, target 2, target 3, then the runner. These were the 2 stop outs that we had losses here. And right now, these 2 are actually winners. I'm going to update that moving forward. Once we get a few more days, I'll update this whole thing moving forward. But we had target 1, target 2, and then target 3 and target 4 were profitable, and that'll be updated. So, it's getting exciting. And hopefully, once we go live on this, which will be shortly, then I welcome you to follow us along. And don't forget to, I recommend you don't use your own money for this. Head over to apextraderfunding.com, pick up yourself a couple funded accounts. Make sure you get your maximum discount you can possibly get on those accounts. You can get accounts anywhere from 25,000 all the way up to 300,000. And then you can use your, of course, your funded one discount, and each account will cost you, I don't know, somewhere between 30 to 50 bucks a month, depending on what size account you get. And then that's it. I mean, after that, you're not risking your own money. So from there, it's all upside. You can start making some money with these. Step number one is getting your evaluation account. Once you pass that, you get your performance account, and then start pulling money out. It's as simple as that. So I welcome you to follow along, and we will see you tomorrow's trading day. After tomorrow's trading day, we'll do another video here tomorrow, which will be August 18th. Okay, make it a great rest of the weekend, and we will see you tomorrow. All right, thanks again. Bye-bye.